All right, what's up, guys? I'm gonna do Pickles Picks this way tonight. All right, so yesterday we dropped through trend to 69.36 here on ES. This is ES. 69.36 tested, bounced, retest the trend, and failed again in the overnight. Um, Down about 26 points, fall up 65. Um, Looks like Dow's continuing its march down, but NQ now catching up. Russell kind of leading the way. We saw upticks in VIX 3-month, and VIX the end of yesterday. This does open another test of the downside here, off of that candle, but then we're gonna be looking to see if we move down further and break through this support level, which opens up test down here at 69.17. And then down here at 68.67. Obviously, last week's close, 6,900, is also a fairly important level if you need something intermediary between those. Any move back to the upside of the trend will be bullish, with confirmation at 69.63. All right. We're going to switch over to Gamma Strike. All right, we'll start here with the Greek Spice Strike. Spot has moved down about 25 points in the overnight, so it's sitting around 6,900 now. So spot's right about here. Obviously not a lot of downside support, although this level is slightly more supportive. And a loss of 68.95 would open up a further move down to about 68.65. Right now, 6,900 holding up. This is an important level on all expirations, which we'll get to in a second. An open back here above 69.12 does open up the upside range for a swing back up to resistance at 30. Break out of the resistance at 30 opens up the move to 50. This upside range is, really only blocked by these local resistances, and these two major resistances to the upside. However, with gamma on the chain right at the flip point, there's very little dealer support, and so it's very likely that any open lower would lead to volatility hedging, and probably some selling into market open, where we could actually fail these kind of like semi-supportive levels between here and actually see that 68-65 test. However, if that were to happen, I would be very cautious of a bounce because gamma is fairly thin down here. Out on all expirations, still have that same flip point, but there's a little bit more gamma to the downside, but a little less resistance to the upside. And this means an open above 69.06 can lead out to the 30 test, 30 to 50. To the upside, open below 6,900 can kind of get stuck here around 68.80, where things get a little weird, but then, would fall into the 70 level. Getting below that looks kind of tough. And so if we take both of these together and we kind of think about it, we probably have a range from about 68.70 to the downside to 69.30 to the upside for the day. Flip point at 6,900. And that is actually not just the positional flip, but also the positive and negative gamma. So 70 out to 30. That's 68. This is 69. Should probably clarify that. That's the most likely range. Anything outside of those is a bearish breakdown, bullish breakout, and that's the 50 test. That's the 50 test. So that should be the range for the day, but we will take a look at Delta and kind of pack that in. This is two data expiry Delta, so Delta into the end of the week. Right now, right around here. Not much Delta stopping a downside move to 80, but 80.75 are supportive. Out to the upside, really nothing to slow things down until we get out to about 35. Then Delta falls off pretty hard, and price can get stuck in this range. So if we factor that in, that kind of trims the breakout range from 30 to 50 down to about 30 to 40. And this probably means that downside 50, 65 range is unlikely to be realized. For 0 DTE charm, charm's already pretty negative. Most of this is calls to the upside. This will be pushing down on spot anyway. There's very little supportive sold puts. A loss of 6,900 kind of puts things on a bad track for the bulls, but that would get progressively worse at 75 and much, much worse below 50. However, this whole position is definitely not helping the bulls, and so bulls during the intraday or into end of day are ideally going to want to be above the 69.20 level, and probably even more so above 30 in order to have some positive pressure from charm into end of day. So right now, not very favorably positioned there. Over on Greek Space Strike, I guess Gamma Curve. I'm sorry. Gamma Curve flattened a little bit at the top side, but is now slightly steeper than it was. Spots down here, so we lost about, let's see, almost 12.5 billion. We're at like 2.7, so we lost about $12 billion in Gamma overnight, leaving dealer Gamma around, well, at just above 6,900s, around 2.7 billion. This is not very supportive. That's fairly low. Gamma doesn't fall off quickly to the downside, so it's not going to really be help accelerating those moves down, which again makes losing 75, 80 very difficult. However, if vol does pick up and this kind of steepens due to the vol, then we might see, imagine twisting that curve a little bit. Then we might see a breakdown of this level, but that would be very, very bearish. To the upside, yeah, the peak flattened out a little bit, which is usually a little more stable. But some of that positioning may have been from earlier in the day when price action was doing better and before Trump's announcement. And we'll dig deeper into that in a minute. Over here, Delta broke down, Gamma broke down. Gamma broke down pretty sharply into end of day, and obviously we're almost right at Gamma neutral in the overnight move. Usually an initial test of Gamma neutral leads to a bounce, but we already got that on the 6th. So this is a retest of Gamma neutral at this point because we had a test of Gamma neutral yesterday. On a retest and a failure, that obviously opens the move up down to Delta neutral, which is in that like 68.50 to 68.65 range. Vega neutral continued to move up, so put sellers still backing off spot. Gamma max moving away from spot as well. Periods where Vega neutral moves to the upside of Gamma Max tend to be highly bearish. They usually lead to big sell-offs. Sometimes that's just like a vol event and price snaps back. But this is definitely preemptive to some bearish price action, and sustained periods of Vega neutral over Gamma Max are very, very bearish. This is basically a risk off by put sellers when you see this happen on SPXW. So that's a big big signal usually. But be careful because like sometimes that price action reverts very quickly. So you see here, above, and you got like kind of a inside day and then a down day and then back snapping back. So just be cautious of that. Um, Go to check out SPX. I don't really know if we need to. This has been kind of boring, but it does look like the buy pressure on skew adjusted delta started to fall off. Gamma neutral still sliding towards spot. Vega neutral moving up. Gamma max kind of coming down a little, but delta neutral moving up quite a lot. So I think that reinforces the theory that some of that out of the money put delta is falling off the chain. We obviously see gamma decline by about 14 billion during the intraday, more so overnight. Um, Probably lost most of the gamma overnight here, with the exception of whatever's at 6,900. So a little bearish. GN here around 68.53, so still within that 50 to 65 target range. And a loss of gamma neutral on the weekly chain, if it truly fails, so we lose like 68.95, 68.90, and we get through that kind of choppy 0-day gamma range, then gamma should fall off fairly steeply down to 68.53, which you can kind of see here because it's like this, like just this little bit right here. So you lose, like between 6,900 at 6 billion gamma down to 65, and you lose about 7.5 billion. What else I want to look at? Okay, so we'll check out gamma by strike. Gamma still. Oh wait, this is the SPX. Sorry. SPX gamma is still very, very high going into tomorrow and the NFP print on Friday. Now, with the overnight move, this is probably moved closer to negative. Um, and so that does open up wider ranges for tomorrow, especially if we see continued downside where, the gamma on the expiry completely falls off. Delta over the next two expiries, not very high, but a little bit higher on Friday. And if we're starting to fall towards delta neutral on Friday, all of this delta is going to push down against spot into the end of the week. So continued downside tomorrow is very bearish for Friday, except for the print, which has to be considered. Over here, options macro. We see that calls price down a little bit, puts priced up, but barely. We're not seeing too much deviation on the chain there. I would say out of the money puts priced up a bit more. You can kind of see that out there. Delta on puts picked up quite a lot though. Delta on puts both a little bit in the money and just past spot picked up, and then quite substantially out of the money. And the peak of put leverage moved closer to spot, and puts picked up in the money and down to the peak. So that uptick in leverage is probably bearish, especially with put premiums rising a little. I mean, they didn't move up much, but they moved up a bit, which is a bit different than their persistent trend down. And then also out of the money call leverage picked up, but like way out of the money, like out here at like 4.1% above spot, 3.2% above spot. So these are probably sold calls. That's probably the reason we're seeing gamma max move higher. Not as fast as we're seeing VN move, but still moving up. Over here on volatility, I'll pop up the HV Ivy skew for the front bucket. So front VRP is still positive, which is um, obviously good for put sellers. However, and I think that's what's that at 4.6, 705, yeah, 4.46, which is higher than it was yesterday. But yesterday didn't really bring in a lot of put sellers, but now 30-day VRPs moved up as well. So you've got 30-day VRP looks like it's up to 3.23. And so now the puts are being bid up both on the 10 and the 30. There's still a little bit of contango, like IV30 is holding slightly above, like 1.34 points above. That's not panic, but premium is being paid for puts across the front end. So you're seeing both premiums rising on the 10-day puts and the 30-day puts, which means there's bearish demand. That's also reflected in the downtick in both skew 10 and 30. Skew 10 days still a bit flatter, so short dated puts are running a little cheaper. Um, and then the 30-day puts are running a little hotter. So what we're looking for here is we're looking for like HV10 to start to climb up. And that will compress the volatility return premium on the front end. And as that short premium edge fades and HV moves higher, it becomes the incentive to sell vol falls off. Right now, HV10 is still declining, so there's still a big cushion there for put sellers to come in, just very high risk because of the steepening skew. If we see skew 30 start to steepen more substantially, so if it pushes more negative while 10 stays flat, that just means the market's like continuing to pay for downside further out and downside protection further out. But if we see skew 10 snap down quickly, that shows that the front end vol is getting bid up a lot faster. Other thing to look for there would be IV10 moving above IV30. If the and then also watch that IV10 IV30 spread. If that collapses and the front moves up, that means near-term stress is being realized. And after Trump's announcement yesterday that defense companies can no longer buy back shares or issue dividends until they meet whatever set of requirements he's going to make up, you know, that persistent selling in Dow is likely to continue because a lot of those defense stocks are held in big portfolios where they're, those like dividend, like 50-year dividends are a big part of the revenue churn for those. So, and they'll have to shed them. They'll have to shed them to maintain their like a consistent yield in a lot of fixed income strategies. So what do you want to trade here? I mean, VRP is like pretty fat in the 10 and the 30, like 4.46 and 3.23. So that's still like selling those puts still favors like some defined risk stuff. If you're expecting like a flat day, which I don't know if we should tomorrow, but also remember that like on the 0 day there's a big advantage in using those puts to finance spreads. If you're thinking about downside, it can benefit you a lot to sell the 30-day and buy the like 7 to 10-day. And then get the near term realization of the pop and volatility, and then kind of hope the market bounces back. Or there might be some opportunities in like calendars or diagonals with the like sell the 10-day spread against buying the 30-day spread. And that way you maintain some downside protection, but you can monetize any decay in IV on the front end. But definitely defined risk across the board there. Down here on the smile, we're seeing a little bit of a bump in IV at like 59.75. Looks like 61.20. 61.25, that range. Obviously, there's a bit of skew to the downside here, and event volatility over the next 2 days is relatively high. Tomorrow mostly just has a lot of old data, so nothing too impressive there. The implied moves 92 points for SPXW. Over here on SPX, it's 59. That gives us an average of 75 and a half. So if we pop back over to trading view, we can mark that. I'm not going to fuck with the neutrals tonight because I don't want to type them all in. But pop these over. Try to give some ranges for tomorrow. So we got 70, 75, 75 there. I'd say things are probably a little weighted to the downside since we're already around 6,900. I would say something like 66, 68.80 close would be decent. I don't know how much bulls are going to try to claw back to mean reversion going into the data. But right now, the selling in Dow is keeping some consistent pressure on the downside. And if that keeps up, and we continue to close that gap down into monthly, down towards monthly gamma neutral, the it'll be harder, kind of harder and harder to bounce things until we get back to that gamma neutral level, and then I'd be very cautious of watching for a bounce. We still have a bit of an island top here off of the gap up on Monday, and so some mean reversion down to 68, like 91. Would be expected, and then failing that, you start to fill the downside gap, and then I would expect if we start to fill that, we're going to probably fill the whole thing, and so that's a little bit of technical support for what we already saw positionally, where we saw if we lost the 68.85 level, very likely to continue down to like 65 or 50. Um, so represented here as well. And I think that's it for today. So yeah, I would watch to see where we open. 6,900 is the flip. 30 bullish out to the upside with a possible breakout to 50. 85 support to the downside and a sub 6,900 open, with a breakdown under 75 opening up the 65 to 50 range. And yeah, that's it. So I'll see you guys in the morning. Have a good night.